So my name is Michael Waitze, and if anybody's wondering why I'm wearing a t-shirt, it's because I live in Bangkok. I got off the plane, when I got on the plane in Bangkok, it was 36 degrees. When I got off the plane here, it was 2 degrees. And I'm not giving in. I'm just gonna still pretend it's warm outside. And just for context, I worked at Morgan Stanley and at Goldman Sachs for 25 years, mostly in Asia. I lived in Tokyo for 22 years, and I live in Bangkok now for 8. So I've been in Asia for almost 30 years. It gives me a slightly different perspective. I'm going to introduce the panel now. I also, by the way, have the largest blockchain podcast in Asia, so you should either listen to it or be on it or both. It's called the Asian Blockchain Podcast. You can look it up. Anyway, let's bring the panel on. So hopefully I'll get everybody's name right. Jean-Paul Servais from the FSMA, Belgium. Thierry Bedoin, the Chief Digital Officer from the Banque of France. Jack Gavigan from ZCash. How did I do? And Franck Guiader from Gide, who's the Head of Innovation in FinTech. So before we started, I just did a little bit of math in this room. There are 16 chairs in every aisle and 22 aisles. That gives us about 352 people. I'm curious just how many people in the room have cryptocurrency or own some kind of Bitcoin. Let's just say it's 50%. I just want to point out that it's not representative of the rest of the world. If you consider the fact that there are somewhere like 40 million crypto wallets in the world, if 25 million of them are being used, and if 3.5 billion people are connected to the internet, it's 71 basis points of people just connected to the internet are actually involved in the crypto space with a wallet. It's almost nobody. So we're not really representative. We should just think about that when we talk about it, right? And when we talk about, I just wanted to put it into context. Now I want to talk about the future of currency. And it's really interesting for me to talk about the future of currency, particularly in Europe. For anybody in this room who's between 20 and 30 years old and is European, you only know one currency. Yeah, well, none of us sort of qualify, and definitely not I. But for those of us that know, we've seen a new currency created. So in 2000, the euro was introduced, and that's the currency that most Europeans have known for their whole lives. But before that, it was an old currency. 1999?
90.
Yeah, no, it was
for banks.
For banks, yeah, excuse me. That's my American ignorance speaking. But I just want to point out the fact that we saw the future of currencies coming. We saw it happen. All of us experienced it. We went through the fear. We went through the trepidation. We thought about the social consequences of having a new currency, and nobody died. But there were some problems. But the other thing I want to think about is now with technology and the rapid advancement, excuse me, of technology, the speed and velocity with which new currencies can be created is just incomparable to what we had before. And I was going to ask Thierry to maybe talk a little bit about the development of euro, the Maastricht Treaty, all the negotiations that went on in relation to the development. And then we can talk about the future of currency after that.
Of course, it was a real great period for Europe, this Maastricht Treaty. And you have to figure out that before the Maastricht Treaty, the money was really an issue between the different countries in Europe and in the world. I just remember in the 90s, just before the signature of the Maastricht Treaty, some attacks against the franc. And other countries in Europe took the point and helped, in fact, Banque de France and other central banks. Yep. And probably this was one of the reasons of this Maastricht Treaty, saying that we are involved in a unique currency, which is euro, and which is much more stable and solid than was all the national currency in these countries before. And from this time, what we have done is that we have built a full system to have a common eurozone with very strong market infrastructures. And all these market infrastructures are built with a settlement system, with delivery versus payment systems, with now the instant payment system, which is one piece of all this puzzle. And we are working on collateral management system for all Europe. So I think that this shows that in fact, we were able with building the euro to give a real stable and provide confidence in the currency, and that is really important for all the citizens. I think that there are two major concerns for central banks in all the euro systems. The first one is the financial stability, to maintain the financial stability. It's very clear in the press. And the second one is to protect the consumer. And that is, of course, the two drivers that we have in all the central banks in Europe. We are all linked together, all central banks in Europe. We have the euro system, which is the collection of all central banks of the country having adopted the euro. And we have, of course, harmonized all our processes and build a common system all together.
So now that we've done that, Jack, maybe you want to talk a little bit about where you see cryptocurrencies fitting into the current environment and just the speed with which that's going to change and what it means in the current regulatory environment. Maybe Jack can talk about that just from a cryptocurrency perspective, and then we can have Jean-Paul talk about the consumer protection side of it.
Well, I think, first of all, I think it's important to remember that Bitcoin arrived on the scene in 2009, right? Just straight after the
financial crisis.
The financial crisis, and in the Genesis block was that reference to the Chancellor of the Exchequer in the UK, bailing out the banks. Now, the technology that underpins it was the key invention, but I think that it arrived at the right time. I think that there was this backlash against the traditional financial system. There was a great deal of backlash against bankers. And I'm an ex-banker. I also worked at Morgan Stanley and Deutsche Bank. So it was interesting as an ex-banker to see this going on. And I think that Bitcoin first, and then the other cryptocurrencies that followed, perhaps tapped into a little bit of that. Also a generational change where young people have they distrust the established mechanisms and structures, and they wanted every generation wants to do something different. They want to rebel, and I think that that cryptocurrencies' success has been partly due to those factors.
But where do you think it fits into the sort of central bank system? And I want to be clear about this too. This, at least in the United States, right? I mean, I haven't lived in the States for 30 years, but I still pay attention. The Federal Reserve System in the US and central bank isn't even that old, right? What is it, 1913? When it was first rolled out, something like that. So the current financial system that we have today, the current currency system that we have today, isn't even that old. And my contention is I want to know what's going to happen as we move into the tokenization and digitalization of the entire currency market, because we didn't see, particularly the US central bank, create the stability that is necessary during the 2007 and 2008 financial crisis. And if we're going to leave that to the central banks again, I think France is doing stuff that's actually pretty innovative, we can talk about in a second. I want to look at this from the consumer protection side. But something's got to give, right?
Very interesting statement. First of all, I would like to thank you for your very interesting question to the audience. So I can see that I have the pleasure to discuss with an audience of believers, if I may say.
Yeah, and that was the point I was trying to make, is that everybody here already believes, but there's
tomorrow,
outside
tomorrow I will be back in Brussels
and nobody will
have another audience with people against Bitcoin. So that's the advantage of being a regulator. So you have to discuss. That's a real pleasure for me to discuss with many different people.
Right.
And that's maybe the problem of the challenge that we have with Bitcoin and crypto assets. I think that it's important to tell to people like you, who are, I think, experienced investor, highly sophisticated investor of use of Bitcoin, that we as regulator, and that's the same for central bank, and I see also many other colleagues from France, and thanks for that, we are not discussing in a kind of ivory tower. What we have to do is, I would say, is to see to which extent new technology, crypto asset can be useful, I would say, for the society. And I can tell you, when I see what happens, what was the menu of all the meetings I have the pleasure to attend at European level, but also at worldwide level. I have the pleasure to be the vice chair of IOSCO. IOSCO is the worldwide organization of securities supervisor like the SEC, in the US, of the FCA, of the IMF in France. And I also have the pleasure to chair at the time being the Financial Innovation Committee of ESMA, the European Agency of Supervisors, which is in fact located in Paris. Frankly speaking, there is a world of difference. Even after the crisis, until 3 or 4 years ago, you was not on the agenda, let us be clear. Bitcoin, I would say, aspect related to fintech, robo-advice was not on the agenda. And I can tell you, frankly speaking, I would say, to make a long story short, I think that I may say that most of the time, even at the level of the ESRB, of our international level, we have more or less 30% of our agenda devoted to all aspects relating to new technology, which is amazing, I would say. At the same time, it's a very interesting but difficult balance, because I think that all political decision makers would expect from their supervisor that we support financial innovation. And that's what we are doing, I would say, with a lot of innovative, even disruptive statements. At the same time, I can tell you, the day that there will be an accident, we will be considered as too liberal. So it's a difficult, I would say, a balance, and that's also the interest of being a supervisor.
Right, so this is the other question I want to ask, right? So we sit in these rooms and we talk a lot about decentralization of everything, decentralization and tokenization of everything, and yet I think in the course of human history, I think humans have at least wanted somebody to blame, right?
Yeah.
So what is real decentralization? What do people think decentralization is in the context of currency?
I'm not sure that's the real issue for supervisor. The question is to see to which extent we need to regulate something. And I have interesting statistic for you, Michael, because I presume that the objective is to be provocative. Let us assume that I will be the bad cop.
Go for it.
And a bad cop, I would say, you know, like in some US series. I have an interesting statistic published by ESMA. And this statistic is published in a report, and I presume that everybody in this room had the possibility to read it. And it was an interesting paper published by the ESMA stakeholders group. I mean, what does it mean? It means people like you, of representatives from the industry, from the user consumer. And there is an interesting apple pie for the year 2017 and then 2018. 2017, I think that I may say, that 70% of the business related to crypto asset and launch of ICO was located in 3 countries. And it was Singapore, Switzerland, and US, which I think we can call, like France and other countries, jurisdictions which are very open-minded in order to give support to financial innovation, to find maybe even bespoke regime. 1 year after, the world changed totally. Of course, we have to be very careful when we use statistics. We can have big operation, launch of big ICO. But 1 year after, we see a fantastic move, I would say, 70% in 3 countries 1 year before, Singapore, Switzerland, and US. 1 year after, 60% is located in 2 islands, Cayman Island and Virgin Island. And what happens in the year? In all these countries, in jurisdiction Switzerland, Singapore, it was decided to launch the first step of an appropriate, modern supervisory system for ICO and so. So that's the question. How do you feel with the statistic? Is it normal? Do we have to rush after this project when we see that there is in 1 year time such a delocalization in some other countries? I am not a specialist of the supervisory system in the Virgin Island and the Cayman Island, but that's for sure that in 2017, the US, Singapore, and Switzerland decide at the same time, more or less, and they were not the only one countries to decide to launch the first step of building an appropriate, proportionate system of how to regulate and to supervise ICO and crypto assets.
Right, so
that's an interesting question.
It's a really interesting question.
A little bit provocative.
A little bit, but
yeah.
I mean, I think it's something we need to talk about, particularly in the development of cryptocurrencies, and maybe you can give us a little bit of perspective on this as well. And I think the question really is, when we talk about this in the innovation space, right? What is the Banque of France doing from the innovation space? What kind of practice are they doing? What are they testing?
Okay.
And why do you think it's happening in France and not in the United States?
First of all, maybe have to start with, of course, this subject is not only a Bank of France issue.
I understand that.
And belonging to the Euro system, that means a group of central banks in Europe. The topic will be managed through this alliance of central banks in Europe. So the issue for us is, of course, the euro and how to use the euro in the most digital way. And of course, if you look at the different steps of the story, you see that the first step, of course, is this launch of crypto assets, Bitcoin, Ether, and so on. You have noticed that I say crypto asset and not cryptocurrency, because central banks say that they don't have the real features, the real functions of a money, of a currency. So we call them crypto assets, and crypto assets are just for risks lovers, just like half of you. And the first step, of course, for central bank is to not, of course, to regulate this space, because it's not possible to regulate Bitcoin or to regulate Ether, but to regulate what is at the border. That means all the intermediaries that will transform, will convert these crypto assets in fiat currency, in fiat money. That means all these crypto asset service suppliers that could provide some services. And now the regulation is located on them, is focused on them, just to foster them to apply, of course, good AML, KYC, good rules. And there is a European regulation for them. And there is also the initiative of the AMF, just to have a kind of label for good ICOs. So this is what the regulators can do. And in this kind of world, of course, the question between to make the link between this virtual and digital world and the fiat real world is a question of interfaces. That means that to try to convert this crypto asset in fiat money and to put them inside the market, existing market infrastructures. And this is the point where we are. And the question is, shall we have two different systems, one which is virtual and digital, not managed, not controlled, and one which is the fully secured, managed, controlled market infrastructures? And I think that this is the way this is what we are doing. We try to improve all our market infrastructures to make them more open, more accessible, more open all over the clock and so on. And the point is that what we are just seeing now is something that is a real trigger for a change in this combination of systems. And this trigger is what? Is the tokenization of the economy. With the tokenization of the economy, what you look for, in fact, is something that can help us to manage a process from end to end with a full life cycle of an asset. And for that, you need to have something that has a good feature of a currency inside the system. That means a good store of value. That means a good system to have a unit of account. And that means to measure the cost. And something that is, of course, a medium of exchange between all inside the transactions. And for that, the issue and the question of a digital money that is provided or controlled by the central bank is a real issue. And this is where we are, and we are working, of course, in this dimension, in this topic. I would say this is why there is a chief digital officer at Banque de France. This is why we have set up a lab, an innovation laboratory. This is why we have set up an operational blockchain at Banque de France with the commercial banks. And I just remind you that is the single operational blockchain for a central bank in the world. I say operational one. Right. And it has been set up at the end of 2017. And of course, it's just to understand very well what are all the mechanisms needed by all the financial actors, and also to be more proactive. And this is probably a new role for central bankers, to be more proactive, to be ready, and to foster the good way to put such digital money in the economy.
So Frank, do you want to give your perspective as well from what you're seeing inside of your innovation lab? You're the head of innovation and fintech at Gide, and you've set up this new center there, this new business line, to talk to your clients about the future of currency. Where do you see that fit into this environment as well?
For sure. Yes, and maybe I could leverage on what Thierry said, because tokenization stems from social changes and also new expectations from customers, investors, companies, and sometimes incumbent companies. So it is interesting to see that we do not have, definitely, to create frontiers between the digital world and the non-digital world. I don't know what is the non-digital world, because the digital economy is the economy, definitely. So tokenization is about a new form of instruments and also a new form of flows and transactions in the economy. That's why it's really important to be extremely clear on the fact that, for instance, regulation must accompany this transformation. Regulation is not here, to create these frontiers, these walls between the two worlds. So when it comes to payments and means of payments and currencies, it's interesting, I think, to talk about stable coins. Because we see more and more in our daily business, people and companies willing to develop or to use stable coins. So what is stability in this world, in this digital world? So I think it's really interesting to see from a legal perspective, but also from an economic perspective, what should we define altogether stability in this world to ensure the market stability.
Right, which in my mind brings up this social question that we were talking about in the room before. And maybe, Jack, you can comment on this, but I want to set this up a little bit. Right, we talked about how long it took to create the euro and then the implementation of the euro and what it meant for the euro as a zone, right? So the Italian economy, the Spanish economy, the Greek economy, the German economy, the French economy were all different, and then they were one, and they were all using the same currency. And I think that as an observer of almost the entire process, I try to understand what the social change is when you implement a new currency, and I think we're still experimenting with that. But in crypto, that experiment's going to happen much faster. We can talk about the regulatory environment as well, but I think when the currency is no longer dependent on a border, I'm really curious what the social change is that's going to come from that, and you brought that up as well. So I'm just curious what you think about that, Jack.
Well, I think that permissionlessness is one of the key aspects here. In order to set up the euro, the EU had to coordinate across all these different countries, all these different central banks, and coordinate and effectively, implicitly reach consensus or get each participant's permission in order to get this thing going. They had to negotiate the treaty.
Right.
They had to set up, the monetary system, achieve stability and the exchange rates,
all that stuff. Yeah.
And it took a long time. And it was a major step forward, and it's had, having a single currency area increases the GDP just simply by having it. It increases the velocity of money, which has beneficial, impact on GDP as well. There are all these beneficial impacts, but it took a huge amount of effort. And the interesting thing about cryptocurrencies is that because nobody needed to go and get permission from the central banks, or indeed from the commercial banks or anything. Yep. So suddenly you had these new currencies and crypto assets popping up, and it meant that the degree of experimentation and the degree of innovation was far faster. So Bitcoin comes out a couple of years later. ZCash comes out and it's got privacy. Ethereum comes out, it's got programmability. And there are all these experiments, and some of them will fail and some of them will succeed. Yeah. And some of the ones that succeed, I think, will end up being co-opted and borrowed and adapted by the central banks. So for example, sooner or later we're going to see tokenized euros and dollars and pounds and so on. And then we're going to move from a financial system where we have real-time gross settlement systems sitting at the top of the pyramids, where every payment has to go up to the top and then back down at the far end. And we're going to have these peer-to-peer systems, where just like central banks issue notes and coins, they will issue tokens. And those transactions will happen directly peer-to-peer, increase the velocity of money, make it easier for people to transact quicker, you know, all the benefits to society and the economy that accrue from that. So I think that, you know, the cryptocurrency space is about the experimentation, and the central banks, I think, are holding back and letting all this experimentation take place and watching what happens and watching what succeeds and what fails. And then they'll come in and they'll pick the winning technologies and they'll apply them to their currencies.
If I may, Michael, if I may elaborate a little bit on your very
Please.
interesting question and the comment provided by Jack. I think that the success of what we are doing, if I may say, because I presume that the overall majority of people are investing in crypto asset, are launching new projects, is, I think the possible success of all this business is linked to trust from both sides, but also to our ability to communicate with each other. Because in fact, it's very interesting to have this kind of dialogue with you, because you are not obliged to discuss with people like me, of people from the Banque de France, which is rather new. Most of the time, we see people who are obliged to discuss with us. Compliance officer, you former employers, if I'm not wrong, correct me. So all these people they don't have the choice. They have to discuss with the supervisor. Most of you are not obliged to do. Most of you maybe don't need a license. And even better or worse than that, you are not interested at all in having discussion with people like me. Who knows in the room what it means FCA, of let us say, of course, the Belgium FSMA? And I could ask a question even in Belgium, let us be clear. I'm not sure that the majority, that you will have the same percentage of people having Bitcoin, that people are able to understand what it means to supervise. So it means that we had to be disruptive. That's the reason why we decide to launch sandboxes, which is, I think, not maybe the best design, but financial innovation hub. And most of the time it's managed, at least in Twin Peaks model, by a central bank, and I would say in a Twin Peaks model, a body like the IMF in France, of the FSMA in Belgium, in charge of consumer protection. So it means that in the first time in history, we decide to accept that we have to speak another language, and that we have to discuss with you where you are in Station F, of maybe not far from a baby food, of not far from a kitchen, if we may joke. So most of the time it's not the case. Most of the time we have discussion in our premises. At the same time, good news, because I'm also doing the same exercise in Belgium, I would say, and also in other countries as chair of the Financial Innovation Committee of ESMA. Frankly speaking, most of the time when I ask the question, is there a problem with me? Is there a problem with the EU regulation? Are there some hurdles in order to develop your business? Most of the time the answer is no. No. Because most of the time, people launching new projects in the fintech area don't need a license. It's about how to improve the speed of payment. Of course, if you are proposing a robo-advice, of course, if you are collecting public money, of course, if you are launching a financial instrument, which is most of the time the case when we speak about ICO, it means that you will fall in the scope of the regulation, because it's a transferable securities with profit right. So it means prospectus, it means transparency, it means MiFID II if you are discussing with possible client about advice. It means also other aspects relating to a possible license if you are promoting robo-advice. But at the same time, I would say it's a challenge from both sides. Also, everybody needs to understand that some white papers are not very good, even very bad. You know, the white papers, when I see some white papers only with picture of smart people, I'm not sure that's a good starting point. Maybe to have some figures could be interesting. Maybe to have some figures which are audited, if it's possible. Of course, if you are a startup, we are speaking about another world. So it's a challenge from both sides, I would say. I think at the same time that the starting point is very interesting, because everybody is open-minded, especially from the kind of regulator. When I see, when I have to chair a meeting at European level, that all jurisdictions try to understand what it means financial innovation, pros and cons, we know that financial stability at the time being, it's not a real challenge. We will see what happens. It can be. And then, of course, it will be, I would say, supervised, and it will be monitored by a different kind of forum of supervisor. So it means that communication channels are very, very important between you and between us as supervisors. And that's, I think, the key aspect in order to be successful in this.
Frank, do you want to give an opinion as well about this balance between sort of decentralization and innovation and these new currencies, and just that balance between what real people want to really get done, like in the physical world? What is that balance? And what's your advice when you talk to your clients?
Thank you for this nice question. Yes, now I would say that once again, I think it's not really important to oppose decentralization with centralization, because the question is tokenization. And we see more and more projects developing infrastructure on blockchain and off-chain as well. So we need to make sure that the interoperability will be great, and we need to accompany this project from a legal perspective, but also with technicians to help these projects to develop their activities on the blockchain and off-chain. And for instance, concerning currencies, it's not about currency, it's about the characteristics of the crypto asset. So sometimes one crypto asset can serve as a mean of payment, sometimes. But it's not always for this that a crypto asset is issued. So the legal qualification is central. And once you have qualified the crypto asset, yes, for sure, you can say if you need a blockchain, if you don't need a blockchain to deal with all the legal questions and issues concerning this project. So, yeah.
Maybe just a personal comment, if I may.
Please do. We only have 2 minutes left.
As soon as you say tokenization,
yeah.
you say token. And if you say token, the native technology to manage token is blockchain. And reinvent technology to manage token in another way, I think would be a great loss. and I think that blockchain has a real potential to fulfill all these needs. And what is interesting in the blockchain is that you can imagine to have new added services and new services with this tokenization of the assets and the economy. And that is interesting, of course, for the market and market players, but also for central banks, because they can add some logic, some rules inside smart contracts in the system.
Inside the token.
Inside the system and linked to the token, or inside the token itself. So I think that it's really important. I just finished to say that it's really important to understand, of course, all the potential of the tokenization and all the systems, and of course for central bank to discuss with all the financial actors just to understand the right use cases. Because central banks, of course, are one part is regulation, are doing regulation, but they are also market infrastructure providers. That means that they provide services. And the financial actor needs, at some times, to have central bank money in their process. So this is why we're interested to cope with, to take all the use cases from you.
Jack, you want to say something?
You know, that element of logic and the ability to create rules and to perhaps enforce certain regulations, I think is really important. You know, to give an example, you could set up some rules, a smart contract, so that donations to a political party get automatically reported to the relevant authority when that donation is made, rather than having to do it after the fact, and then if somebody forgets, it becomes an embarrassment and a problem. You know, the ability to program money, the ability to make it smart, I think is probably one of the biggest revelations that's going to emerge from this whole cryptocurrency boom.
Yeah, I mean, I just want to say 2 more things. The first is, I think we didn't have enough time to really talk about the social impact, about the velocity and the change of what currency is and isn't going to be. And I think it's really important just for all of us to think about what that means when currencies are less border bound, than they are today, and we didn't get a chance to address that, but I really want people to think about it. The second thing is I want to thank everybody on this panel for having this conversation. This was really great for me. I learned something. And then finally, for anybody who's ever organized a conference, these things are hard to do. I've come all the way from Bangkok, you've come from Belgium, you've come from the UK, from London, and everybody else in this room has come from somewhere else. So I really just want to thank all of the people that have organized this, whether it's Michael Mara, Nicholas Cantu, the entire team of people who made it easier for me to get here, but also who have built a pretty incredible conference. Anyway, thank you very much.
Thank you, Michael.